This is your Precision Markets recap of a NASDAQ trade that was taken by Precision Markets coach Brian. We're going to dive into the higher time frame, trading time frame, and lower time frame sauce so that you can be able to take these same trades too. So let's go ahead and begin. First and foremost, the Precision Market stresses that we have to have a higher time frame narrative in order for us to make a lower time frame entry. So there's an important checklist of items that we must use to be able to decide exactly what is the market telling us. And so I'm going to pull this checklist out as we go from each time frame so that you can see the logical thought process that we take while making trades. So the first thing we always want to check is our higher time frame. And so there are a couple questions we want to ask ourselves. What is the market structure telling us? Are we in an uptrend or are we in a downtrend? Looking at the market right now, what we can see is that the market made a lower low, and then it made a lower high, and then it came back to make a lower low, and now the market is retracing back to come back up to possibly make what we expect a new lower high. So our expectation is somewhere in this region from the 4-hour time frame that we're on, price is eventually going to go down to take out this lower low. So what that means is that this lower low is weak, whereas we expect our lower high to be strong and protected. So we already know a little bit more about our bias coming into the market. Our market structure, what we're going to say is that it's bearish. We also know that we're making a corrective move, is that price is coming back from making a lower low, and now our expected order of operations will end up making us into creating a lower high and then going down. So the next thing we have on our list is checking, are we in the premium or are we in the discount zone? So to do that, we take a fib, and we use the fib from the lower high going down to our lower low. And essentially everything that is above what we consider, I would say consider 60%. Let me get some text real quick. Everything in this region would be considered premium, and everything 40 and 0 would be considered discount. And everything that's right here in the middle between the 60 and 40, we're going to call that EQ, or equilibrium. So essentially it lines up to be something like this. Everything between here, equilibrium, everything between here, discount, everything here between premium. So what does that mean is that it helps us to get an understanding of what is most high probability. So when we're in the premium zone, like we've been able to note now, what that means is that sales are more likely. We always want to take sales from a premium spot. So on our 4-hour time frame, we know that a sale is most likely. Now, the last thing that we're going to check is our POIs of interest. All right, so there's one key point of interest that I'm going to take, and it's this one right here. And it looks like this is the zone that we're at right now. I'm going to cover the bottom of this wick and the top of this wick to just cover that whole little range. And so we're going to call this, all right, H4 zone. Now, we're able to help understand that a little bit in part by our Precision Markets market structure indicator that helps and gives us our market structure points. And we know at those pivotal points, that's also where we have what people like to call extreme POIs. I just focus on POIs. So now that we've been able to figure this out for the higher time frame, let's go down to our trading time frame, which is our 15 minutes. All right. So I'm going to switch our checklist now to our trading time frame. And so we have the same thing. So the market, as we know, was making a corrective wave. This was our lower low from the 4-hour time frame. And so price is now coming back up into this region. So that means it's going corrective on a 4-hour downtrend. We expect to see the 15-minute in uptrend. And that's what we've been having. So the market is in an uptrend, but what we noticed is the most important is that right here, price made a break of structure. In fact, let me do that a little bit differently. There we go. So on our trading time frame right here, we had what we considered a higher time frame chalk, but it just broke down on the lower side. So I consider that a structural break. So right here, what my expectation is from a pricing standpoint is knowing that price went from this point down to this point. I'm expecting somewhere here it's going to make a lower high, and then price will continue. So this is what my expected order flow is of what's going to happen next. So we know from a market structure standpoint right now, on the trading time frame, we're unconfirmed bearish. Now, it's making what I would consider a corrective move if it's going to follow the bearish trend. And we know that also we're in a premium range on the 15-minute. And the reason why is I will show you here. So we're going to pull out our handy dandy fib. And the fib's going to go from this high to this low. And then instantly, what do you see? You see that price is here between our 160, which is in our premium zone. So we're in premium both in 4-hour and on 15 minutes, which gives us a high confidence for sell. But now we just need to find our POI of interest. Since the market went down and broke right here and created a change of character, what we have, and I would consider here, is a strong POI on our 15-minute. In fact, looked at it, price typed into it and price came out. So right now, price has already left us, but there's still an opportunity for us to get in when we look at our internal structure. So price came all the way down here, and right here is a small demand zone. And the reason why is because it had a small wick here. Price went just a little bit lower, and then price came back up. So therefore, there was demand that had to push above this wick, and price just broke it. So now what that means for me is that I am looking now to see if price is going to come back. And so now we have a little internal leg that I'm watching. And now this is where we look at order flow within market structure. So the order flow is, and if I ran my same fib tool, if I treat this all as one leg, what I'm expecting is price to somewhere come back into our internal structures premium zone. And that would put us right about right here. So this is now the area that I'm watching. Even though price has already tapped into it from a major structure perspective, I'm now looking at internal structure to be able to get a continuation of sorts. So let me go ahead and clean up the chart, get rid of some things that we don't need. All right. So now I'm just going to speed up price a little bit so I can tap into that, and let's see what kind of reaction we get. So price is almost, all right, perfect. Price is tapped into our little area that we're watching. Pull this up just a little bit. So now we've met all the criteria for our trading time frame. Now this is the point that we'll actually go down to drop into our entry time frame. Let me move this list. I'm going to change to our entry time frame checklist, and we're going to go ahead and go down to our 1 minute time frame. All right, so cool. We are now dropped into our 1 minute time frame. And so now we have a couple things. Has it tapped into our POI? Yes. Do we have a change of character, which is one of the things that we're always looking for? And so what does that essentially mean is that price is coming. Well, I'm going to do it actually up case. If price is coming up, we want to see it sweep the highs, break the low. We want to see it come back so that we can have it tap into what we consider our flip zone. And that's the zone that broke this low right here. So once price taps into, if we see the right items, we'll go ahead and take it and just go from there. So at the current moment, this would be the last low that we're watching. We haven't seen anything yet. So I'm going to actually draw that with this line. And therefore, let me change the color really quick. Where's my, oh, there it is. No, that's not it. Guess I didn't build one. All right, we're going to draw this one. Yeah, I don't like that color either. Let me go ahead and do this red and make it thicker too so y'all can see it. All right, so I've got a thick line. We're checking to see, all right, when price breaks here, we know we've completed our chalk. Hasn't happened yet, so let us go ahead and continue. So prices come close, wicked, but not exactly gone through. Let's see. Not yet. We're going to have one more. All right, cool. So now we have our chalk. All right, so let's identify our flip zone. We're not looking for a continuation flip because we can just look for our flip zone right now. And so then the last piece we'll figure out is then once it taps into it, are we going to use a limit order or are we going to look for a candlestick rejection? We're going to err on the side of doing a limit order on this. And so I essentially going to treat this as a range-based range-based supply, because we're going to take the wick highs and the wick lows and use that to be able to decide this whole range is really basically a supply zone. So I'm going to mark this out so that y'all can see it. Here we have it in yellow. All right. So we've wicked above, and what we're going to do is we're going to place order right here. And if it taps this in, great. Now, what's important to also note too is that we want to consider our spread and such. A lot of times, market makers and the ones that place the bigger orders, they know that we have our stop losses like right here, and then they just let orders go. So to do that, I use a little bit wider stop. Also, if you look to the left, you'll notice that we had pretty much a unmitigated supply zone that was also right here. So if price was to go past our current zone, it's probably going to tap into this zone right here. So keeping that in mind, I want to use both of these to be able to anchor my stop loss. So what we're going to do is we're going to put our stop loss somewhere back behind here. And in fact, we'll move our entry more towards the middle of it so that we can get, and I'm just going to make it up just a little bit larger. So, perfect. Now, what are we looking for our targets wise? Well, I want to go back to thinking about logically where we're going. We know the 4-hour was based upon being in our premium zone and was tapping into a 4-hour zone. We've also tapped into an M15 zone. So in that case, I want to target the M15 and the 4-hour lows. So that's going to put our target that's going to go way down here. But we're also going to take partials along the way as well too. So that would put us somewhere in this region, which would be like a 1 to 50 stop. All right. So let's see what it does first. All right. Price has tapped this in, and look what happened. It wicked right above our current zone, and look at where it taps into. It tapped into that previous unmitigated M1 supply zone. So that's why we keep in mind exactly what's happened and what's happening in price as we look to the left. So now we have all of that figured out. Hold on a second while I get my checklist. Hold on 1 second, guys. I want to move this checklist off so that we don't have this anymore. So now we're inside of our order, right? And so we've had our chalk. As I mentioned, price has tapped this in. So now we want to focus on our order management. And so from our order management, our focus is going to be taking partials when we get to at least 4R, and then we're going to let the less ride so that we at least pay ourselves along the way. And so as you see, price hovered above the zone. It comes back. It taps in again. But at this point, we're still doing good because price is moving down. And now we're making profits. All right. So first, I am going to pull this back up real quick. All right. So at this point, we're getting close to our 1 to 4. Let me figure it out. Just a little bit. Yeah, close enough. So all right, perfect. Right here, at this point, we're going to take partials. So at this point, we're going to pay ourselves. So at this point, we're taking partials to make sure that we pay ourselves. I'm taking at this point just to cover stop loss. So we're at 1 to 4 essentially. So I'm taking 25% off. at this point, just for us to cover our stop loss, because I think that this trade has the ability to run, especially because we have both the higher time frame and our trading time frame into alignment. And at this point, I'm going to let it run till it gets down to these lows down here. So now at this point, let's see how the trade ends up doing. And I'm going to actually switch to our M15 time frame for us to do it, so we don't have to sit through so many candles. That gives us somewhere roughly about target a little bit lower, about 1 to 46 R. So let's see how it rolls. Price barely taps. Price barely tapped us back. It was a good thing that we took partials. If we had used our stop loss, we would have got tagged out. But if you look at it, the trade came down to almost 46 R. It is currently hovering at about 45 R, for almost 46 R. So that completed everything for our trade recap. If you have questions about it, please join our Precision Markets community. You want to learn how to trade, please make sure to join in on our Precision Markets Discord group so that you can learn from our community, learn from the course, and be able to make trades like these with high confidence and high probability. Thanks so much for tuning in.